There is a secret about money that Wall Street tries very hard to keep from you. They want you to believe that when the stock market crashes, money simply disappears. They want you to think that when a recession hits, wealth evaporates into thin air like water in a desert. This is a lie, and it is a lie that keeps the middle class terrified and paralyzed. Here is the mathematical reality. Wealth is never destroyed, it is transferred. In 1929, during the Great Depression, the factories didn't vanish, the farmland didn't disappear, the oil in the ground didn't evaporate. The assets were still there. What changed was who owned them. The ownership transferred from the impatient to the patient. It transferred from the people who were leveraged to the hilt to the people who had cash. It transferred from the gamblers to the investors. In 2026, we are staring down the barrel of what I believe will be the greatest wealth transfer in modern history. The conditions are perfect. We have asset prices that have been inflated by a decade of cheap money. We have a generation of investors who have never seen a real bear market. And we have a global economy that is restructuring itself in real time. Most people, the 99%, are going to be on the wrong side of this transfer. They are going to panic. They are going to sell good assets at bad prices because they are scared. They are going to cling to cash while inflation eats it alive, and then they are going to buy back into the market exactly when they should be selling. They are the liquidity that the smart money uses to exit. I do not want you to be the liquidity. I want you to be the beneficiary. I have spent over 80 years participating in these cycles. I have seen the panic of 1974. I have seen the euphoria of 1999. I have seen the despair of 2008. The faces change, the technology changes, but the behavior never changes. Human nature is a constant, and because human nature is predictable, the transfer of wealth is predictable. Today, I am going to give you the playbook on how to position yourself on the receiving end of this transfer. This is not about day trading. It is not about guessing which crypto coin will double next week. It is about aligning yourself with the fundamental laws of financial gravity. If you follow these principles, you won't just survive 2026, you will use it to build the kind of dynasty wealth that lasts for generations. Let's begin with the first and most painful lesson. Rule 1. You must divorce price from value. This is the mistake that destroys more fortunes than anything else. Most people look at a stock price or a house price and think that number tells them what the asset is worth. It does not. Price is what you pay. Value is what you get. In 2026, you are going to see prices do wild things. You might see the price of a great business drop by 40 or 50%. The average person sees that red number and thinks, the business is failing, I must sell before it goes to zero. The wealthy person looks at the same red number and asks a different question. Has the ability of this business to generate cash over the next 10 years changed? If the answer is no, but the price is down 50%, the market is offering you a gift. It is offering you a dollar bill for 50 cents. But you can only accept that gift if you understand the difference between the price on the screen and the value of the business. You must stop obsessing over the daily scoreboard. If you owned a farm, you wouldn't ask the real estate agent to quote you a price every single day. You would look at the corn, you would look at the harvest, you would look at the productivity. Treat your investments the same way. In 2026, the market is going to be manic depressive. It will be euphoric one day and suicidal the next. If you let those mood swings dictate your actions, you will lose. Ignore the price. Focus on the value. Rule 2. Cash is potential energy. I catch a lot of heat for holding billions of dollars in cash at Berkshire Hathaway. People say, Warren, inflation is 4%. You're losing money. They are looking at the movie frame by frame. I am looking at the whole picture. Cash is a terrible investment if you hold it forever, but cash is the only investment that gives you the power to act when the world is on fire. Think of cash as ammunition. When the enemy is retreating, when everyone else is forced to sell their assets to pay their debts, the person with the cash is the king. In a crisis, cash becomes the most valuable asset on earth, not because it yields a return, but because it buys you assets that yield incredible returns. In 2026, we are going to see liquidity dry up. Banks will stop lending, people will stop buying, and in that moment, if you have a stockpile of cash, even if it's just $10,000 or $20,000, you will be able to buy quality assets for pennies on the dollar. This is the essence of the wealth transfer. The person with no cash is forced to sell their house, their stocks, their future just to survive. The person with cash buys that future at a discount. Build your cash position now, not because you love cash, but because you love what cash can buy during a panic. Rule 3. Avoid the zeros. There's a simple rule in mathematics. Anything multiplied by 0 is 0. It doesn't matter if you have a streak of 100 brilliant investment decisions. If decision 101 blows up your entire portfolio, you are back to 0. In the euphoric markets of the last few years, people forgot about the 0. They leveraged themselves. They borrowed money to buy volatile assets. They put their entire life savings into speculative coins or single stocks. They were picking up pennies in front of a steamroller. When the cycle turns, and it always turns, the steamroller arrives. The leverage that made you feel like a genius on the way up will crush you on the way down. In 2026, your primary job is survival. You must eliminate the risk of ruin. This means no margin debt. It means diversifying your holdings so that the failure of one company doesn't wreck your life. It means staying away from investments you don't understand. If you don't know who the patsy at the poker table is, it's you. If you can't explain how an investment makes money in 2 sentences, don't buy it. The goal is to stay in the game. As long as you have chips on the table, you can win. But if you hit 0, you are out forever. Rule 5. The asset arbitrage. This is the unfair advantage of the individual investor. Wall Street professionals cannot be patient. They have bosses. They have quarterly targets. They have clients yelling at them if they underperform for 3 months. They are forced to think in quarters. You have the luxury of thinking in decades. This is a massive edge. In 2026, the market might punish companies that are investing for the long term because it hurts their short-term earnings. The stock price will drop. The Wall Street algorithms will sell. You can step in and buy. You are engaging in time arbitrage. You are buying the asset from someone who needs the money now, and you are willing to wait for the payoff later. The stock market is a device for transferring money from the impatient to the patient. If you are willing to hold an asset for 10 years, the day-to-day volatility becomes irrelevant. In fact, it becomes your friend. It allows you to buy more shares at lower prices. Stop trying to get rich by Tuesday. Try to get rich by 2036. It is much easier, much less stressful, and much more likely to happen. Rule 5. Be asset heavy and liability light. Look at your personal balance sheet. I don't mean your bank account, I mean your life structure. Most people are liability heavy. They have a mortgage that is too big, 2 car payments, credit card debt, subscriptions, and a lifestyle that requires a high income just to maintain. They are fragile. One recession, one job loss, and they collapse. The wealthy are asset heavy. They own things that pay them. Dividend stocks, rental properties, businesses, intellectual property, royalties. Their lifestyle costs are low relative to their income. They are anti-fragile. In 2026, you want to aggressively shift your life from liability-heavy to asset-heavy. Sell the expensive car, downsize the house if you have to. Take that capital and buy productive assets. You want to wake up in the morning knowing that even if you don't work, your assets are working for you. This is how you escape the rat race. You don't escape by running faster. You escape by building a machine that runs for you. It takes time. It takes sacrifice. You might have to look poor to your neighbors for a few years while you build your base, but while they're looking rich and going broke, you will be quietly becoming free.
Rule 6. The intellectual moat.
In times of economic chaos, the one thing that cannot be inflated away or taxed away is your judgment, your ability to think clearly when everyone else is losing their minds. This is your intellectual moat. Most people have no moat. They get their opinions from social media. They make financial decisions based on fear or greed. They are leaves blowing in the wind. You need to anchor yourself in history, in principles. Read the biographies of people who survived the Great Depression. Read about the Panic of 1907. Read about the Weimar Republic inflation. History doesn't repeat, but it rhymes. If you understand what happened before, you won't be surprised by what happens next. When you see headlines screaming "End of the world," you will recognize it as a buying opportunity. When you see your neighbor bragging about how much money he made on a speculative stock, you will recognize it as a warning sign. Build your mind. It is the only asset that is truly yours. Rule 7. Bet on America and the world. Despite all the doom and gloom, despite the debt, despite the politics, I remain an optimist. I have bet on America my entire life, and it has never let me down. The resilience of the human spirit, the ingenuity of entrepreneurs, the drive to build a better life, these forces are stronger than any interest rate hike or recession. When you buy a broad index fund, you are betting on that ingenuity. You are betting that people will wake up tomorrow and try to solve problems. You are betting that businesses will find ways to become more efficient. That is a bet I am willing to take every single day. Don't let the pessimists talk you out of your future. Pessimism sounds smart, but optimism makes money. The world is not ending, it is just changing, and the people who embrace that change, who position themselves with assets and patience, will inherit the future. The wealth transfer of 2026 is coming. It is inevitable. The gears of the economy are grinding, and the pressure is building. You have a choice to make right now. You can continue to operate like the majority, reactive, emotional, short-term focused, and vulnerable. You can watch the news and let it terrify you. You can sell at the bottom and buy at the top. You can be the liquidity that allows the wealthy to exit. Or you can decide to be the destination where that wealth lands. You can build your fortress of cash. You can educate yourself on value. You can strip away your bad debts. You can lengthen your time horizon. You can refuse to participate in the panic. It requires discipline. It requires doing the boring things over and over again. It requires being willing to look foolish in the short term to be wise in the long term. I have spent 80 years watching people try to find a shortcut. There isn't one. The path is right in front of you. It is paved with patience, rationality, and productive assets. The storm is coming, but for the prepared, the storm is not a threat. It is an opportunity. Start building your ark today. Check your expenses. Check your asset allocation. Check your mindset. The greatest opportunity of your lifetime is approaching. Do not let it slip through your fingers because you are too busy being scared. Be greedy when others are fearful. Be fearful when others are greedy. And right now, learn to sit on your hands and wait for the fat pitch. It's coming. Subscribe to this channel. We are going to navigate this together. I will keep reminding you of the fundamentals when the world goes crazy. I will keep pointing you back to the math when the emotions take over. We are building a community of rational owners. Welcome to the long game.